What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit notification bells so don't miss future videos. Everybody wants me to review IEP stock. I just got a message on Instagram from someone that's very young that's learning about dividend investing. Got comments from you guys in the comment section, and this is a very interesting conglomerate. So I'm going to go over these guys. I'm going to explain to you some of my rationales, the good and bad of these guys. By the way, we're at 11,700 subscribers, so you guys are amazing. So the one thing with conglomerates, you need to understand what's inside of it, okay? Like a lot of people discuss 3M. Why 3M? I would consider them a conglomerate. Some people say they are, some people they aren't. The way 3M is, they have so many stuff inside of them, like so much medical supplies that they sell, tape and all this. So, they're just a beast, okay? So IEP stock, we need to see what's inside of them. I've done reviews about 3M, and I have done reviews on IEP, but I'm going to do kind of a remix for you guys with these guys. So let's look inside of these guys. Let's check this stock out right now. And now here we are, IEP stock, ICANN Enterprises, LP common stock, sitting at 53.87. Average volume 397.05K. Market cap is 18.18 billion US dollars. Year range is 47.17 to 55.73. Day range is 53.80 to 54.23, and its previous close was 53.95. So, first off, it's not doing too well compared to Berkshire Hathaway. So this is how it's done against the S&P. Past 5 years, it's gone down. So that's one thing to look at. And they did like a crazy stock split back in 2012. They really don't have an extensive stock split history. So this is how they're looking in the past 5 years and since inception. So let's check these guys out in the inside. That's the most important thing. Not just on the outside with a dividend, but on the inside. So we'll check these guys out. So here's some information on their website. ICANN Enterprises is a diversified holding company with operating segments in investment, energy, automotive, real estate, food, packaging, home fashion, and pharma. Majorly owned by Carl Icahn. Right here, he owns approximately 86% of it. So let's see, investment. Here's some of their revenue and net income. So see, this is in millions as of September 30th, 2022. Their investment, their assets are right here in investment, energy, automotive, real estate, metals, all other. So, and holding company. So how much they have right here, and here's their revenue right here. This is appears to be in millions, 13,315. We're going to go over that in a little bit. And here's their net income, okay, right here. But the thing is, it's important understanding how they formed and what they do. So we need to figure out a few. So here's their holding companies right here. So CVR Energy, it's strictly mid-continent petroleum refiner and nitrogen fertilizer producer. Here's Auto Plus right here. AMCO, so this is just distribution of automotive parts in the aftermarket, as well as providing automotive services. Real estate segment, so that's part of it. West Point Home, over 200 years of heritage with some best known brands in home fashion. Here's Vivus, therapeutic needs of patients with serious medical conditions and life-limiting diseases. So there's a few things that I'm also going to go over. So here's some information with IEP. So here's significant holdings as of September 30th, 2022. First Energy actually is the utility company where I pay for electricity. So that's in Ohio. They're a big company, but their dividend has not done very well. So that's one thing I want to bring up. There's a little bit of controversy with First Energy, with some corruption issues that happen with bribery of a politician as well. Newell Brands, I have owned these guys in the past. I'm going to go over just a little bit with Newell Brands as a company. Got Xerox and Perk Holdings, But Newell Brands, I'm going to go over just briefly for you guys. They're Herbalife right here, Caesars, and Cloudera. So they have governance changes with the IEP. They're trying to, uh, adapt a little bit. I find is very interesting. So, I mean, they're trying as a company, but Newell Brands, I'll go over some products that these guys have real quick and their stock real quick. Newell Brands is sitting at 14.77. They have a dividend yield of 6.23%, PE ratio of 31.29, average volume 3.59 million. The market cap is 6.11 billion US dollars. The tier range is 12.25 to 20.45. Day range is 13.46 to 14.95, and its previous close was 14.60. So one thing, these guys have a lot of brands out there. I'll probably do an individual review on these guys, but you're seeing some of the stocks that he owns or companies or that he's integrated with not doing very well. So it was $30, now it's 14. So Carl Icahn owns a lot of shares of Newell Brands, and he also owns a lot of shares of First Energy. But integration with IEP being kind of like a conglomerate companies that own. Okay, so they have these things, but what's inside of them and how is their revenue? Big thing is looking at their overall revenue, because if the revenue sucks, dividend yield high because the revenue sucks and it's not doing too well. They're trying to get you as a yield trap. So let's check that out. And this is what raises concerns. So this is in millions US dollars. 2015, it was 15,272. 2016, it was 7,379. 2017, 12,600. 2018, 11,777. 2019, 8,994. 2020, 6,123. Now you can blame the pandemic, but what is going on with this inconsistency? And 2021, 11,028. Let's check out a few more things. Start in 2010, it was 25 cents. 2011 was 50 cents. Jumped to 10 cents. Then a dollar, $1.25, $1.50, $1.75 in 2018, 2019, $2, and it was very stagnant dollars. So they're going to classify dividend growth in 5 years as 2.60%. Annual dividend was $8 if you buy one, with a 14.85% dividend yield. But this payout ratio is not even available. That is a huge red flag for yield trap. If these guys on Zacks can't even, I tried to do the best review on IEP stock. Really, I mean, with them kind of like being a conglomerate. And remember, you have to pay a K1. Of course, this is not financial advice for entertainment. Only disclaimer in the description. The thing is, there's some problems. Okay. Now we're going to go back to the even more with their history. So here's an article on finance.yahoo.com. So Icahn Enterprises very high LTM payout ratio of 8,626% over the last 3 years suggests the company is paying its shareholders more than what it's earning, and explains the company's shrinking earnings. Paying a dividend higher than reported profits is not a sustainable move. You see the 3 risks that we have identified for Icahn Enterprises by visiting our risk dashboard free on our platform. So literally right here, this is enough to scream yield trap and potential dividend cut. A payout ratio of 8,626%. I've never seen a payout ratio that high before. And that just screams run to me. Now, you're going to get $2, blah, 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 but I prefer dividend stocks that grow. He invested, I mean, part of like his investments are not very good, to be honest with you. And, this IEP, I mean, it just looks terrible. The appearance looks terrible. So the high dividend yield percentage scream yield trap. You have to be extra careful with that. So right here, I'm not touching these guys with a 10-foot pole. I've posted numerous videos on these guys. And to invest in First Energy, which has so many issues, and one time they actually double charged me for stuff, and who knows, they're probably trying to pay off court costs for the bribery scandal that happened with plants and stuff. But the thing is, they, again, I'm not confirming that they're doing that with their plants. I'm just cracking a joke because they're so screwed up. And the other red flag is Cleveland Browns Stadium is First Energy, so that's another red flag right there. With First Energy, and I used to own First Energy, and their dividend really hasn't been very hot, as well as Newell Brandt. So a lot of these investments that he's making are not really dividend growth stocks. I mean, Newell Brands is a great company, but they have a lot of things to work on. And I think IEP has a lot of things to work on because the investments are not very hot. So let me know what you think of this video. If you are new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss videos. I don't like IEP. I don't buy IEP. Yep, one, you have to pay a K1, and two, there's a huge risk for a dividend cut if you're having a payout ratio of 8,626%. So you tell me. If you like them, go for it. Provide your rationales in the comment section. And if you're new to this YouTube channel, make sure you subscribe, hit the notification bell so you don't miss future videos. Take care.